And now for something completely different.
Forget everything you've been told by others before. Get ready for the real deal, the full story. Real talk about money, markets, life. Now, it's The Real Investment Show, presented by RIA Advisors.
And welcome to Financial Fitness Friday. I'm Rich Rosso, CFP, with Danny Ratliff, CFP. I want to just say that I think some of the drivers on Houston roads have already hit the eggnog and deserve a sack of coal along with Mr. Jerome Powell.
You miss me yet? You miss me now, right? Now I was the best Fed chair, not that guy.
I just want to tell you, when Powell says the central bank's year-end inflation projection has kind of fallen apart, what's funny, Danny, is he's all worried about tariffs, but where has he been over the last 4 years worried about inflation? So the first inflation was transitory, and we did nothing, even though there was a load of fiscal stimulus, which the Fed just absolutely, ultimately ignored, when they should have been raising rates through that period, right? Now he's lowering rates in the face of sticky inflation. Do you understand it? Because I think the market had a pretty solid response, but only because he sounds like he has no idea what he's talking about.
Go ahead, Danny. Stick up for me now. Come on. Stick up for your little lady.
Yeah, I'm not sticking up for anybody.
Hey.
The issue is, I don't think that Powell said anything that the market didn't already know.
Well, except for the two that they're surprised about how many rate cuts there may be next year.
Two rate cuts. I think we have to take that with a grain of salt because it was, market expected 6 rate cuts last year, this time last year. Then the market expected 0 rate cuts. Then we went, all of a sudden we get to July and we're going to have 4. We got 3. Look, this is transitory, just like Powell and everything else they say with inflation and anything else when it comes to economic data. And we are looking backwards, which is a difficult job. PCE numbers come out this morning, which is the Fed's really big indicator from an inflation perspective. We'll see what those numbers are. I don't know if we're going to see some seasonality here or, right now, retail sales has been relatively good. People still been
feeling good,
money. They feel
money.
good. This last week, it may have changed a bit. We've had a little bit of choppy markets. Market did get overextended. We expected that, hoping for the Santa Claus rally. Powell may have screwed that up. I don't know. We may still see this.
Well, now we also have all of this government shutdown deadline.
Correct.
So we've got a lot of headline risk here.
Options expiration this week. We've had a lot of stuff happening all at once.
Exactly. But overall, and Mike Leibowitz wrote one of the best articles on tariffs, what we see going on across the globe is ultimately disinflationary, not inflationary. Yes, inflation is sticky, but all this focus on tariffs are going to do all this harm and all this stuff is just really, I just think, all foam, no beer. So, but listen, everybody's on one side of the boat. Look at the small business index, right? Sentiment is through the roof. Everybody's on one side of the boat. This kind of a sell-off makes sense, and futures are down today because of this government shutdown deadline. But don't discount the fact that you have had a very, very solid year so far. And don't go blowing up your portfolio because we're already getting inklings of investors who are panicking, which is absolutely, I hate to say it, ridiculous. Okay? This is the price of admission. And I'm worried about this for next year, Danny, where volatility will be back to some degree. We will get normal pullbacks and corrections, and people are going to freak out about it because they're just not used to it. A year like this year is not normal.
Yeah, but I can argue we should be used to this.
We're not.
But we just had a 10% decline in July and August. We had, another large decline in April and May. I mean, this isn't something that we're not used to. It's something that we should actually be fairly normalized, especially over the last 4 years.
What's normal?
But we become so short-sighted.
We have. And
Well, and I think the optimism is the issue, right?
It is.
We're so optimistic. Everybody around is optimistic. And I know not everybody, but
But
when
animal
you look
spirits
at,
are high, yeah.
Yeah, animal spirits are extremely high. You look at, like you said, the National Federation of Independent Small Businesses, those numbers are great. You look at, hey, deregulation, all these things are going to occur. And I've been telling most people, hey, look, I think we're optimistic, but we're cautiously optimistic. We have a lot of things, this balancing act between, deregulation, which should be good, potential for making these tax cuts permanent, potential to lower corporate taxes. That should be good for markets. Now, firing people, cutting government spending, that can be bad for markets. Tariffs, to some extent, they're going to be a tad bit of a drag depending on what they are, but not to the extent I think that everybody's suggesting. And that's what's kind of funny in a lot of ways, Rich, is that we've been there and done that already with President-elect Trump. We've seen the data. We've seen the numbers. Now, the question is, can you spark the private sector?
Well, it's going to be a delicate balancing act, right? Because for 4 years, we have had a government-driven economy. We've had more government jobs in sectors that are dealing with illegal migrants. We have had all of that. Now what we have to do is transfer this to the private sector. And sometimes, Danny, that handoff is going to be volatile because markets are in blue or red. They look at green, and there's just going to be less money in the system. Yes, there's still stimulus, but we're just not going to see the same level of government support, especially if the Doge thing works. And again, sometimes what's good for Main Street is not good for Wall Street. So this turmoil, this fighting is going to is going to create more volatility that everybody's going to have to be prepared for. So all this about, the market's going to be up dramatically next year, I don't know. Less cash in the system. That's what the market looks at, right? Less stimulus. So this handoff, you said it, cutting regulation, right? Doing all the things that maybe lower input costs for goods and services. That's great. But this handoff, what we've been used to for 4 years, and actually I'm going to say over a decade of government stimulus, now you want the private sector to take over. It's sort of like balancing plates at the same time. That may not happen perfectly, and it's not going to match up with the animal spirits. So, people's emotions are going to be all over the place. A good advisor is going to help you manage those properly and make sure you don't make bad decisions with your money.
Well, and I think, we've talked about a lot of things this year in the sense of okay, you brought up goal scooping, going ahead and taking some additional funds off. You can still do so. You're
Absolutely.
up this year. It's been a good year. Yeah, we've got a little bit of volatility. Do we know if we're going to have the Santa Claus rally now? No, but we may. And so I know there's been a lot who've been waiting towards the end of the year, just thinking, hey, you know what? We've got a little bit more upside here. And that's not out of the realm, right? You get a government deal here today, a continuing resolution. You get a little bit of relief. Maybe people say, whew, don't have to worry about that. We go into next week. And we've had plenty of government shutdowns. This will not be the end of the world, despite what they're telling you.
Exactly.
It's going to be okay. Social Security is going to get paid.
Yes. People are going to get paid.
Yeah.
But you have to rein in this crazy spending we've seen, and the market is going to be volatile through that process. Focus on your goals. That's the most important thing. When we get back, we're going to talk about what a Trump win means for your taxes, especially estate taxes. Stay tuned. We'll be right back.
Get daily investment news you can use, delivered at the speed of the internet at realinvestmentadvice.com.
What will a Trump presidency mean for your money? What is the market outlook under the new administration's policies? Register now for the RIA Economic Summit 2025 Market Outlook under a Trump presidency, featuring Adam Taggart of Thoughtful Money, RIA Portfolio Manager Michael Leibowitz, and Chief Investment Strategist Lance Roberts with the RIA crew. Saturday, January 18th. Register today today for the RIA Economic Summit 2025 Market Outlook under a Trump presidency at realinvestmentadvice.com. Realinvestmentadvice.com. Register today.
When it comes to wealth management, most people think of stocks and bonds, but it's like enjoying one layer in a 7-layer cake. At RIA Advisors, we want to make sure you get your cake and eat it too. Social Security, Medicare, creating a tax-friendly retirement paycheck. Perhaps you're saving for college. How about life insurance, guaranteed income solutions, all along with comprehensive planning. At RIA, a holistic approach to your money is our priority. Call us today, 855-RIA-PLAN, or find us online at realinvestmentadvice.com. Realinvestmentadvice.com.
The Real Investment Show.
Small businesses are discovering that attracting and retaining top talent come down to more than just salary. In today's highly competitive job market, compensation is more than just wages. Hi, I'm Tom Allen, RIA Advisors Retirement Plan Consultant. Healthcare and retirement plans can make the difference in hiring and retaining the best employees. We can show you how to build an affordable, effective employment package that delivers true value for your workers and your business. Call me toll free at 855-RIA-PLAN or online at realinvestmentadvice.com.
The Real Investment Show YouTube page has all of our videos ready for your easy access. From 3 minutes on markets and money to each day's radio shows like Technically Speaking Tuesday, Financial Fitness Friday, and the latest analysis from Lance Roberts and Michael Leibowitz. Subscribe and bookmark our YouTube channel for The Real Investment Show, or just click on the show links at realinvestmentadvice.com.
You're listening to The Real Investment Show.
And we're back. And listen, to anybody I offended this year, work on yourself, because I'm going to do it again in 2025. Matter of fact, I think I'm going to level up offending people in 2025.
You're gonna do what again? Offend people?
I had a drone.
24's not over, man. You got a lot of time.
I flew a drone over the Ratliff estate, and I didn't see him leave the house this morning. His driver didn't show up, and then he's here.
Well,
the man made it.
that's what good technology can do for you, Richard. Drone blocking technology.
Drone blocking technology.
I can't believe you don't have that. Lance didn't give you one for Christmas?
Imagine flying a drone over the Roberts compound. That thing's getting shot down.
You know, he'd never know. It's a dungeon.
Some alligator leaps out of the moat and grabs it like Godzilla and versus, yeah. So listen, we're going to have our RIA 2025 Economic Summit. Listen, I'm really excited about this. Our summit last year, I will rival any major Wall Street firm to provide the information and data that Lance and Michael provided at this conference. It bowled me over. I mean, these guys are good, but man, they're good. Okay, so we got Lance, we got Adam, Michael Leibowitz, live in person, early bird registration, $99 through December 31st. Otherwise, it's going $149. But I will tell you, it's Saturday, January 18th, 2025. Register on our website. Continental breakfast is going to be served. But let me explain. You are going to learn a lot. You're going to see the masters at work. Adam Taggart will also be there. Danny and I will also be doing a lot. We did a lot of great Q&A about financial planning questions in the face of what we're going to talk about, a Trump presidency. But most important, overall financial planning tips you're probably not getting anywhere else, right? Because we have an academic bent. We study this stuff. We want to make sure you're doing the right decisions. And next year, we're also going to have some really great new presentations, retirement income, retirement blueprint. So we'll do them online and in person. So make sure that you keep abreast of those changes. So obviously, Danny, not many of us, except for Lance, have to worry about the estate tax exemptions per person, right? 13.6 million. I mean, not only the wealthiest Americans are going to be working on that, but this is a good time of year just from a estate planning perspective to begin with, right? I even have clients that are doing bypass trust planning or spousal trust planning because of second marriages or third marriages, which and children from both marriages. So it makes it difficult. So the estate planning part seems to be getting overlooked across the board. Like even in our planning, everybody's focused on retirement income and that's great. but we have to make sure people are at least doing the basics. But when it comes to Trump, it looks like it's going to be status quo, right? It looks like we may get an extension, as you said earlier, of the Tax Cuts and Jobs Act. But we probably are going to see the exemptions stay the same way. Now, I don't see the SALT deductions coming back. I don't know, but and actually that only really benefits mostly the coastal states, but I don't really see it. What do you think?
I think that's the only way that the Republicans can expect to get the Democrats on board with actually extending these. They're going to have to make some concessions. And, kind of like what we're seeing right now with this continuing resolution with the debt ceiling, they're going to throw a lot of stuff in here. And hopefully, this new administration is going to be very keen on keeping these, debt down. It seems like, Trump made his living on leverage and debt. And his first term was like that, right? We extended and we actually added more debt. Now, it seems like the focus is much different this time. And I hope it is in the sense of, from a debt perspective, I mean, we can only go so long like this. I know everybody fears that we're falling off a cliff right now. I mean, we can look at a lot of other countries that have gone down similar paths that are still okay. And yet, we produce much more. GDP is much stronger. Demographics are better. I mean, we're still the, as you would say, the cleanest dirty shirt or the best house in a bad neighborhood. But these are things that need to be addressed for future generations. And if we want to keep these taxes lower. And so I think you're going to have a culmination of kind of all these things occurring at once. Yeah. And the challenge, I believe, is going to be that, Trump and Republicans don't have this huge majority. It's very slim.
Right.
It's the slimmest since 1930. Mm-hmm. And you're already seeing the Liz Cheneys, the McConnells, a lot of these other old school rhinos who are giving him grief on just appointments. And I suspect they're going to give him grief on a lot of other things. And so it's going to take everybody falling in line for him to be able to get a lot of these things done. Or
it's going to be heavy lifting.
He's going to have to reach across the aisle.
Yeah.
And so while I would think that we're very optimistic in the sense, or much more so over a Harris administration who's campaigned at many different times on raising taxes, on all these additional things. We watch what President Biden is doing day to day right now. Just,
what is he doing?
He's giving money away.
Oh, yeah.
I mean, this morning, we had 55,000 public service workers that their debt was relieved for student loan debt.
Making sure all that stuff's getting done before.
Yeah, they're handing money out left and right because they fear that when they come in, this new administration, that's going to stop, right? NGOs are getting record amounts of money right now.
Yep.
EPA is giving funds away. It's personally, I think, it's treasonous and criminal in many ways.
I would agree with that.
You got to think about this. That's not their money. It's your money. You're the one paying taxes. And so that's what's frustrating about it. So it's a fine line. I think, we're optimistic that something will get done. Odds are much higher from a tax perspective. You mentioned the estate tax. If this were not done, this will start to capture a lot more wealth. And, we see this often where somebody has a family business or, land they inherited. It's been in the family for years. It's a working farm or ranch or, just assets that there's not a lot of liquidity. So on, a balance sheet, they look wealthy. But from a cash perspective, that may not be the case.
Sure.
And they may fall in some of these estate tax problems. And that, I think, is going to be the bigger issue longer term as far as, if you see this go from essentially 14 million to 7. It was 5 previously and before the Tax Cuts and Jobs Act. And if it goes back down, they're going to inflate that up a bit. And so the thought is it's going to be somewhere around 7 million. So 14 million for a couple. So it doesn't capture many people, but it captures a lot more people than you think. And it's not that they have the liquidity, they can pay, a bunch of cash on hand, but those are things that I think that we're watching and things that we need to be considering. And so how many times do you visit with somebody and you say, hey, how's the estate plan?
What estate plan?
Yeah. And that's scary.
I mean, just even the basics of estate planning, which is very, very important. So of course, obviously, as advisors, we always tell people we advise people what to do. We partner with them, but then we neglect sometimes our own stuff, right? So I found a really good site called NOK Box, NOK Box, but this is a next of kin box that a couple created after they went through the trials and tribulations of trying to fix dad's estate. but it's not a binder or workbook. So I did order one of these, Danny, because it has all these file folders and checklists in the NOK Box, so that you know, for insurance and income and friends and post-medical bills, everything. 15 categories that cover everything from life insurance policies to funeral directives to your dog's vet's information. I thought this was a really great way for people to, even before their estate plan, to get organized. And it's called the Next of Kin box. They have different types. They have smaller ones, fireproof ones. Again, we're not paid by this service. I found it. I thought it was genius, and I ordered one because I'm like, heck, I need to get my stuff in order. What am I doing? I'm telling everybody else to do it, and I'm not doing it.
So is this a little safe?
Well, you could get it in fireproof, but it's really a file folder box. Right? So your next of kin all in one place. So some people use notebooks, workbooks. This seems to me a much neater way to do it.
Spell that again for everybody.
NOK, next of kin, box, BOX. So I think I thought it was a really cool story about a woman. She was a teacher and a real estate agent in Colorado. When her dad passed away, they went up to his house in upstate New York and planned the funeral and all that, but they couldn't figure out where all his possessions were. How many times have we heard this, Danny? Over and over and over and over again, right?
Yeah. Unfortunately.
And then you got to realize, too, well, since everything's online, I'm like, oh, my gosh, does my daughter know the life insurance and who to I'm like, I got to get this stuff together. I'm crazy. What am I doing? I've got it in my own little file, but not enough where she can go to it and find it so quickly. So this is a really good way for people to get
people
organized.
Are genius. This is so basic.
Yeah,
I'm sorry. I
but
mean,
it is basic. But guess what? You have to start with basic.
Yeah.
And guess what, Danny? If you're one who's left behind, right? We look at it as basic. But if, say, it's your kids or your spouse who's sort of lost, this really does make it easy that in my grief, I could just go to a file folder, right? As opposed to maybe how we look at it. But it could be a warm-up exercise to, okay, now I also need to do this, right?
Well,
I need to get my directives. Some of these file folders I can't fill because I don't have a healthcare directive. I don't have a financial power of attorney.
Well, that's right. Many people are going to get this. It's going to be empty because they haven't done this stuff.
Right, and that's why they have 15 checklists. They have checklists in there, not 15. They have checklists in there to allow you to fill those folders. So, like you said, it is very simple. But I think with estate planning, sometimes you have to take very small steps to get to the bigger picture. And I think that works out in a way.
No, I agree. This is a great idea. And many people are doing that. We have that, right? I mean, binders where basically similar stuff's in here, right? Here's where everything you need to know. Here's any of the contacts, attorney, CPA, advisors, things of that nature. Here's who the trustee is on the trust. Here's who the executor of the estate is. Here's all the medical directives, power of attorneys. And, you can go in quite a bit of depth, but these things are great reminders for what you need and what you should be doing, or maybe what you lack. But most people, Rich, don't do this until they actually experience it with a loved one. Don't be that guy. Go ahead and get it done.
Don't be that person. Yeah, we'll be right back.
This is great. There's so many of these damn things out there.
The Real Investment Advice blog. It's required reading for the informed investor. Catch it today at realinvestmentadvice.com.
What will a Trump presidency mean for your money? What is the market outlook under the new administration's policies? Register now for the RIA Economic Summit 2025 Market Outlook under a Trump presidency, featuring Adam Taggart of Thoughtful Money, RIA Portfolio Manager Michael Leibowitz, and Chief Investment Strategist Lance Roberts with the RIA crew. Saturday, January 18th. Register today for the RIA Economic Summit 2025 Market Outlook under a Trump presidency at realinvestmentadvice.com. Realinvestmentadvice.com. Register today. Register today.
Hi, Lance Roberts here. If you're like most people, your 401k plan represents the bulk of your retirement assets, and unfortunately for many, managing your 401k plan can be difficult. There's so many choices, so many things to consider. With just a quick email, a couple of questions, you can put RIA advisors to work for you managing your 401k plan. Just simply click Ask a Question at realinvestmentadvice.com or give us a call at 855-RIA-PLAN. That's realinvestmentadvice.com.
The Real Investment Show.
And now, another page from the Real Investment Advisors Investing Manifesto. Manage risk and volatility rather than trying to manage gains. You don't have to be right all the time. Long-term investing success is a 70% gain. Let us help you reach your financial goals with RIA Advisors. Neither bull nor bear. RIA Advisors, 281-501-1791 or online at realinvestmentadvice.com.
Can't catch the whole show now? Listen to our podcast later at realinvestmentadvice.com.
Show your love this Christmas by giving a used gift to somebody you love.
Nothing says Merry Christmas like a 2005 big screen TV.
Merry Christmas to you too, you little freak. On a roll this morning. Anyway, I may be divorced by the time I get home. It's better than stimulus.
Listen to the Real Investment Show podcast from your favorite service. Same show, your schedule at realinvestmentadvice.com.
When it comes to wealth management, most people think of stocks and bonds, but it's like enjoying one layer in a 7-layer cake. At RIA Advisors, we want to make sure you get your cake and eat it too. Social Security, Medicare, creating a tax-friendly retirement paycheck. Perhaps you're saving for college. How about life insurance, guaranteed income solutions, all along with comprehensive planning. At RIA, a holistic approach to your money is our priority. Call us today, 855-RIA-PLAN, or find us online at realinvestmentadvice.com. realinvestmentadvice.com.
Health and financial security touches everyone within your organization. Offering benefits for all doesn't need to be complicated. Hi, I'm Tom Allen, Senior Benefits Consultant at RIA Advisors. RIA Benefits provides independent expertise to find solutions that speak to the mission of your business, the culture you want to establish, and the budget you are able to work within. Book a free consultation with me at realinvestmentadvice.com/retirement, and we'll find a solution that takes care of your most important asset, your people. realinvestmentadvice.com/retirement, realinvestmentadvice.com.
The Real Investment Show YouTube channel has all our videos ready for your easy access, like Technically Speaking Tuesday, Financial Fitness Friday, and the latest analysis from Lance Roberts and Michael Leibowitz. Subscribe and bookmark our YouTube channel at realinvestmentadvice.com.
You're listening to The Real Investment Show.
We were having a pretty good behind the show. Danny getting all fired up. Growling, snarling. Yeah, when we talk about raising taxes, and that's the only thing you focus on, it's very myopic because you also have to look at one, what's the return on the investment? And Lance does a great job showing off, even when we have your stimulus, how much it adds, say, per dollar to the GDP. It's ridiculously low, right? So we burn through cash. And then there's a growth side of the equation and animal spirits that can help with that. So here's a sign of a short-term top, Danny. So I just read this morning from the Wall Street Journal. A new type of addict is showing up at Gamblers Anonymous meetings across the country. Investors hooked on the market's riskier trades. So they're looking at one in the Murray Hill neighborhood in Manhattan. One man who sits there at Gamblers Anonymous calls options the crack cocaine of the stock market. 60 people, all men, folding chairs, all lamenting about some form of addiction. And now what they're discovering at these Gamblers Anonymous meetings, trading and betting during the pandemic boom, Danny.
Interesting. So they're showing up to AA meetings. Don't they have their own meetings?
Well, these are Gamblers Anonymous meetings.
Ah, okay.
I mean, you might, after you lose money, you might need to hit up the
AA
both meeting, but so they're desperate to stop trading, so they're going to these Gamblers Anonymous meetings. So, I mean, these are modeled after Alcoholics Anonymous, but you never really had stock traders sitting in on these meetings, but now you do, and it makes sense where you've been in the market cycle, right? And all the different products that Wall Street's happy to give you to trade your money away. And apps like Robinhood and so forth, right? And with Bitcoin, at least what it was doing. So now these people are actually sitting in.
No, I find that fascinating.
I think so.
Well, you visit with different people, and we get people a lot of times that are really astute. They get up at 3 a.m. to study, Asian markets and study what's going on in
they
Europe.
love it, right?
And,
Yeah, they do it.
And
Yeah, they do.
they spend all this time, and then eventually, they call somebody like us or an advisor, and they're like, "Hey, my wife said I can't do this anymore. Right? I'm spending all of my time. I'm working more than when I was actually physically working, and this is not what she envisioned for retirement." And,
Exactly.
But many of them, it's a difficult thing to give up because it's control, it's your money, it's something that you've worked very hard for, and so that kind of handing the reins over to somebody that has a similar vision that can help execute that vision.
That
but
is
then,
one way to unhook from the gambler thing.
well,
right?
that's right, and also quality of life perspective from a family, and then also what happens. So we get a lot of people that'll call and say, "Listen, I've been doing this forever. It's going to be very difficult for me to hand over the reins, but I know I need to because my wife or my husband has never done this ever. They've never even paid bills. They don't know where money is. They don't know how to invest. And it's not that they're not smart. Many of them are brilliant. They've just never been tasked to do that because I've done it. So I need somebody that can help in the event I'm gone." And a lot of times it's after a health scare or a health event too. But many times it's a mandate from the spouse. So I get it. It's
So what's fascinating about this article, they allowed a Wall Street Journal writer to sit in. And there's this suburban dad of 3, big balding guy, big smile. He says he's haunted by the rising price of Bitcoin and the riches that could have been his, right? Since
oh man,
Bitcoin's up around 40%, right? So he said, what would have happened if I just left my Bitcoin in a digital wallet and handed it over to my wife? But he had to sell it just at the low. Right? So cryptocurrencies, a lot of people with that. Condos. I mean, that's what you buy with the cryptocurrency. Options trading. So there's one guy in here, he says that he invested $100 in Bitcoin, watched it soar, poured thousands of dollars into Ether and smaller speculative coins. And when his portfolio rose above $1 million, he said, "Oh, man, that's great. That's 4 Lambos." He flew to Florida, took a potential vacation, and then he didn't sell. But he was trading hundreds of times a day, waking up, like you said, at 4 a.m. to monitor his portfolio. So this becomes a big addiction. So Pennsylvania's gambling hotline has fielded more calls to gambling in stocks and crypto since 2021 than they did in the prior 6 years combined. Because this is what crypto is. People think crypto is an investment. It is a speculation. It is that's why gamblers are attracted to it. I don't see any gamblers anonymous for Procter & Gamble in here, do you?
Not yet.
Yeah, I've been trading too much Exxon. Get out of here. So it has become this casino, especially with the products that are available today, as opposed to having rules around, say, even owning crypto. Listen, there's nothing wrong. Lance owns crypto. I own crypto. It's fine. I own it because I want to get a feel for what it is. I mean, I own stuff that does like Ethereum and all that, but to me, it's just nonsense money. And I watch it, and it's just amazing to see the emotions around it, Danny. I mean, that whole psychology of money around crypto is fascinating to me. Really.
You want to talk about animal spirits?
Which animal?
All of them.
I have a lot of squirrels.
No, but that's the narrative surrounding
Absolutely.
that, and I can't wait to see the chat blow up on your thoughts on crypto.
Boy, I don't want to even talk about it.
Yeah, it's going to be fun. Buckle up, buddy.
Yeah. I have nothing wrong. Listen, I think you can own anything as long as you have rules around it. Right? I think that you should have the ability in the free market to own whatever the hell you want. As long as you know what you're risking. That's it.
Yeah.
You want to gamble on Robinhood with stocks? You want to use AI to pick okay. But that's not where my serious money's going to go. I might use it as a training ground. We have clients that trade stocks, and that's fine for a small amount of money.
Yeah, but you had already been out of most of them, right? Because your rules would have dictated to go ahead and take profits and run.
Take profits. Exactly. So listen, this guy, after selling his house in 2022, This guy poured thousands of dollars into Grayscale Bitcoin Trust. Well, here's a guy, actually Lockheed Martin, and Texas Pacific Land before amping up risk with options trading. He said eventually he had almost no money left to trade with after losses in options. So it does make sense that in the short term, Gamblers Anonymous is a really good place for some traders to go.
But interesting. I did not know we were going to take that turn today.
I didn't either. I just read it. I just read it and thought, this is pretty fascinating, and it sort of goes along with what you were talking about, which is the animal spirits at a high, and where everybody's on one side of the boat, and all the endorphins are flying all over the place, hitting you in the head like mosquitoes in Texas. You know, it makes sense that you're going to get a pullback in market and better entry points for some of the investments that you've wanted to own. Speaking of that.
Well, you know, Vault brings up on the YouTube channel. So if you don't already subscribe, or if you're listening on the radio, go to the Real Investment Show on YouTube, click subscribe, hit like, please. Share it with your friends. Talk about it at Christmas. But, you know, more and more stockbrokers are floating 24-hour trading, right?
Oh, yeah,
And we're seeing
that's really great. Yeah.
No, that's terrible.
I know. It's good for them, but not good for you.
But the average person, I mean, you're going to wake up, you can't sleep at night, you're going to get up and start trading?
Yeah.
And these people clearly who need help, they may be doing that, right?
You know who I miss the most being away from the show? Larry on the chat. I really
Gamblers
missed him.
Anonymous is for losers. If you're winning, you're not going. Well, that's true. Unless you're somebody makes you.
I know what Larry's getting for Christmas. I just can't say it on the radio.
Oh.
Stinky. Nah, we love you, Larry. Sometimes you got some really good stuff. And then sometimes, I could go to Larry Smith Anonymous meeting. So here's one thing you got to think about by the end of the year is, are you going to do a financial plan next year, right? And how are you going to employ Social Security? And a lot of interesting perspective about how people wait and not. There's a great study David Planchette just did that I'm going to include in our new retirement income workshop. You know, who actually delays retirement? Most people, as soon as they retire, take Social Security. And I guess, you know, there's a reason for that too. If I'm retiring at 62, there's probably a physical reason why, and that I do need to take Social Security, right? I need to put food on the table. I can't do the same level of job. I have some sort of disability that warrants the cash flow. But obviously, the more money people have, the more net worth, liquid assets, investments they own, even like $100,000 to $500,000 of portfolio value, they even might wait a little bit past full retirement age to take Social Security. And I think that that's an art on when to take Social Security, as well as considering spouses in your equation, your own situation outside of guaranteed income. We have a rule at RIA is that at least 50% of your portfolio should be in some form of guaranteed income, even if it is just Social Security. So we're going to talk about this nuance of when to take Social Security when we return.
Get daily investment news you can use, delivered at the speed of the internet at realinvestmentadvice.com.
What will a Trump presidency mean for your money? What is the market outlook under the new administration's policies? Register now for the RIA Economic Summit 2025 Market Outlook under a Trump presidency, featuring Adam Taggart of Thoughtful Money, RIA Portfolio Manager Michael Leibowitz, and Chief Investment Strategist Lance Roberts with the RIA crew. Saturday, January 18th. Register today for the RIA Economic Summit 2025 Market Outlook under a Trump presidency at realinvestmentadvice.com. Realinvestmentadvice.com. Register today.
Small businesses are now being challenged by the lack of employees and how to attract and recruit the best employees. To get the better employee, you'll have to offer a better package. Hi, I'm Tom Allen, RIA Advisors Retirement Plan Consultant. Don't assume a 401k plan is too costly or complicated for your small business to offer. Let us show you how to make the most of an affordable and effective plan that will deliver true value for your business and your employees. Call me toll-free at 855-RIA-PLAN or online at realinvestmentadvice.com. That's realinvestmentadvice.com.
The Real Investment Show.
When it comes to wealth management, most people think of stocks and bonds, but it's like enjoying one layer in a 7-layer cake. At RIA Advisors, we want to make sure you get your cake and eat it too. Social Security, Medicare, creating a tax-friendly retirement paycheck. Perhaps you're saving for college. How about life insurance, guaranteed income solutions, all along with comprehensive planning? At RIA, a holistic approach to your money is our priority. Call us today, 855-RIA-PLAN, or find us online at realinvestmentadvice.com. Realinvestmentadvice.com.
In 1999, a parafiduciary group of financial advisors were busted by corporate giants for trying to operate in their clients' best interest. These men promptly escaped from a high-cost margin environment to the Houston Energy Corridor. Today, still excoriated by their former employers, they survive as protectors of others' fortunes. If you have a problem about preserving capital, if no one else can help, and you can find them right here, maybe you should hire the RIA team.
You're listening to The Real Investment Show.
Larry says you can go ahead and start at 62, spend at 67, restart it at 70. Sounds like a good thing, but you have to start receiving your benefits at 62 and then stop them, but you're going to have to pay back all the benefits you received before reaching full retirement age. Within the first 12 months of claiming benefits. You used to be able to do that beforehand.
Well, yeah, but
that's withdrawing your application. We used to have, and see, the Social Security Administration caught on to savvy advisors who would have clients, because I had clients pay back into Social Security.
Yeah, you could do restricted application. You could do file and
But I
suspend,
had
which
to
is
pay
what
all
Larry's
the money back
alluding
that they
to.
have taken so they could
Correct.
restart the clock.
Correct.
Because there was no better annuity out there. And now they've stopped that. So withdrawal options only within 12 months.
Yeah, so starting it, then stopping it, 5 years later, and then letting it grow for a couple years is not on the table any longer. You got that 1 year that you can pay it back.
You
but
can
if
pay it back
past
in
the
12
1
months,
year,
but you used to be able to pay it back longer.
anytime. Yeah.
Yeah. But I think they caught on to that. I don't know if it was an administrative nightmare or it was more of, there's some savvy advisors telling people to do this, and we don't
I
want to
got
do
a feeling Larry's going out and buying Bitcoin for those 5 years, turning around, putting his proceeds back very happily.
I think he's buying Hak2 coin.
At least for now.
But that's what I only opinion.
What? Larry would never do that.
I'm kidding. So someone said on here, I can't remember who said it, that this withdrawal, he's going to withdraw maybe from his 401k or retirement accounts first and let Social Security sit there. I think that's not a bad strategy. See, and that's where you have to look at, how do I take Social Security? It is an art versus a science in many ways, because you have to look at all your collective income streams. You also have to look at the market cycle that you're in. When I started in this business, we would tell people who didn't want to work is take your Social Security early and put it into the market. And I stopped doing that around 2003, thinking that market cycles were not going to be the same as they were in the past. So there are periods of time when that worked, but where valuations are now and where future returns could be, it may be worth you actually withdrawing from your retirement accounts, and this is something I started doing in 2003 and actually lost clients by suggesting this because they were like, are you crazy? I got this tax-deferred snowball, and you're telling me that I should start drawing down on Social Security. I should draw this account and let my Social Security sit? Yeah, because there were times when Social Security is going to be a better choice, or guaranteed income overall is going to be a better choice than variable assets, depending on returns, right? This is not one of those years, but there's going to be years where you're going to be frustrated as heck with your variable assets. You might have to reduce, and we've gone through this, Danny, how many times people have had to reduce their account withdrawal rate. And if they would have had guaranteed income coming in, they didn't really worry about it. Yeah, it's fine. But I have enough guaranteed income, whether it's Social Security pension, Social Security, and an annuity structure, to pay my bills. So it's not, it's not going to hurt me to just collect my check and wait.
Yeah.
And that's the beauty of having a guaranteed income stream. And that's what David Blanchett was talking about in this new study, is that people that have guaranteed income tend to spend more money in retirement because they know they have money coming in every month, right? Regardless, they're not worried about the variability of the asset. Because most investors are pretty smart, even compared to advisors, where they're not looking at taking just 4% a year and being brainless and mindless about it. They are going to assess what the market's done. Like this year, we talked about gold scooping and maybe people giving themselves a little bit of a raise. But what did we do during the pandemic? Remember the studies coming out? Oh, the 4% rule is really 2.5% rule, remember?
Correct.
So then that's just highly disruptive to your lifestyle as a retiree and causes a lot of stress versus, oh, well, yeah, I got my Social Security and my pension and my annuity income, and who cares?
When I had that conversation with somebody here recently, retiring, we worked together for 15 plus years, looking to, and very, market volatility makes him extremely anxious. Mm-hmm. And so been super, super conservative, has a large legacy intent. He's done the hard work. He's saved. He's a voracious saver, right? Like done a fantastic job and, has really limited spending, but still enjoys life and going to retire. And we had the conversation like, hey, he has some pension income. I mean, he's got a lot of good stuff that most people just don't have access to. Mm-hmm. Good Social Security, wife has good income, retirement income coming in as well. It's going to meet their needs. And had an old pension out there. And he's like, well, should I take the pension? Should I take the lump sum? Talked about the pros and cons. Mm-hmm. And then, biggest con with taking the pension from the company is that if both of you die, those funds disappear. You could get one payment. Your heirs don't get anything that's there. And so the plan worked if he did the pension or the lump sum. That's not always the case. Sometimes it works much better doing one or the other. But we kind of talked about it and said, you're missing out. And the intent for a lot of these funds is a legacy intent. And if you had additional income, guaranteed income, and maybe it's not that you take the pension, but you go buy a secondary policy, a single premium immediate annuity that's going to provide an income to you. It may not be quite as much, but if something happens to you, to the both of you, God forbid, the kids get the funds. Would that, from a psychological standpoint, allow you to not worry about the funds as much and allow them to grow and actually get a tad bit more aggressive to get that growth element in funds, knowing that we're just going to be looking at doing Roth conversions? How do we strategically take funds out from a traditional IRA, put them in either a Roth or a taxable account, just playing the tax game to try to be as efficient as possible, keep more money in his pocket. Mm-hmm. And I think it frees somebody up who's maybe anxious about markets or just uncomfortable.
Absolutely. To
say, this is long-term money. It's down right now. I'm not worried. I don't need it.
But I'm not going to worry, right? Because you said in a way, it's mental accounting, but I'm okay with it because you're saying, hey, this is legacy money.
Yeah.
This is 100 years old, right?
That's right. 30, 40
but I don't
years
have to worry
from now.
about my current income flow coming in right now.
That's right.
Right.
Yeah. And so for some people, it can be a great benefit. And I can tell you what, there's some people I wish I would have known better, like when we met. Like I would encourage them to take the pension, like really highly encourage them. It wasn't from a monetary perspective, like their plan didn't work, but because I don't know if they didn't realize this. I know I certainly didn't, but they were big time spenders. And it protected them from themselves.
That's a good way to look at it too.
And it wasn't like frivolous stuff. It's like spending on family, helping family out and doing this. And next thing you know, like, whoa, they're going to be helping you pretty soon.
But this is sort of even though there's math in there, this is the art of retirement income planning, knowing who the clients are, what makes them tick. Right. Yes, taking into account IRMA that you might get charged on for withdrawals, Medicare surcharges, all this stuff, taxation on Social Security and all these backdoor taxes we always talk about. But there is an emotional component or a component to this that you just brought up that has to do with knowing the client and what's best for them.
Yeah.
So that is the art of when to take Social Security as well. Okay. And, if you're single and no one else depends on you and you want to take it sooner, I don't suggest it unless your health is not bad, your health is not good, or you have some sort of other cash flow issues, then why wait? If I have health issues, then I'm probably not going to wait. I might wait till at least full retirement age, but why am I waiting for 70? I'm looking for those survivor benefits to help a spouse that didn't pay into the system as much as I did. So this collaboration on when to take Social Security and when to delay it is part of retirement planning and just part of your overall planning that comes into play when you do a financial plan.
Well, there's so many components to it that I think that need to be accounted for, and think about, okay, what's the best way to do so? And sometimes you may say, hey, I'm going to delay this, but I'm going to take income from here until we get to full retirement age. Or, hey, maybe you just need it, and here's how we're going to recreate that paycheck. And so really it's about, how do you do so from a tax efficient perspective? How do we do so to make sure that all those needs, wants, wishes, all the goals are met? And then thinking about, and that's just day-to-day living, right? And then what are those things that you want to check off long-term? How do we get to that point? And how do you do so with getting as much money out of the system as you can? I think that's the key. And taking it early, unless you have a terminal illness or maybe you're, like you said, you're single, that may not be the right way, or you just have to, right?
I have a client, I dealt with a client's uncle. He had to take it early. He's probably not going to make it. And we said, listen, this is something you probably need to do, and the cash flow would help relieve the stress. Yes, so there are times you work with an advisor who is very knowledgeable in Social Security and Medicare coordination and work out those numbers overall. So again, we're coming up to the close of the show. The RIA Economic Summit, again, we'll hope to see all of you there. Not you, Larry. And
come on, Larry, bring it.
He'll be screaming,
File and suspend is still available. No, it's not.
and we'll have a lot of fun with Larry at the RIA 2025 Economic Summit. Lance Roberts, Adam Taggart, Michael Leibowitz, sign up at our website, Hotel Sonesta. Very nice place.
It is.
Saturday, January 18th. Looking forward to seeing everybody there. And also hoping that you have a really great Christmas. And we'll
see you next year.
I always hated that kid that said that.
Happy New Year. You were waiting for that, weren't you?
I do.
All right. See you guys.
Take care.